Kari made a great point in that when you think about what is this dispersion that we're looking at, the reason that Apple is selling off this week is not just on tax loss selling. It's about questions about the fundamentals. And so if you look at each of these stocks and you think about, for instance, as Josh mentioned, advertising. Is this the best way to play advertising from your perspective in this environment? Or are there names outside of Alphabet that you could potentially harness to put in your portfolio for exposure? The other thing that I want to drive home and that you really want to think about is there's a lot of people that are talking about, and we talked about this in our Solving for 2024 piece, the opportunity to start to buy some of those laggards. Just because you're buying outside of the S&P 500 or buying outside of these 7 names doesn't necessarily imply that large caps are going to underperform here in the U.S. or that even some of these stocks that have performed well last year can't replicate that, a la NVIDIA. Like, you can't say that there's a binary decision here because, Scott, there is money that needs to come off the sidelines. Cash rates are coming down. Short-term yields are coming down. Whether that goes into short-duration bonds or back into some of these underloved parts of the equity market that didn't participate, that's really where we start to kind of fill this gap, if you will, on tax-less selling and some of this fundamental dispersion that we're seeing in the Mag 7 right now.
How do you want to...
Yeah, back to you, Shannon. No, I think that what Shannon said is so true. There is still money coming in off the sidelines, and you've got a lot of names to look for. This is a year that we can't just rely on 5 or 6 names to boost your portfolio so you can beat the S&P. You're going to have to work harder, and that means digging into what's working and what isn't going to work for these companies in a slowing environment where there's some growth, but it's not so easy to find it.
Well, and also I want to point out, it's not just 2 days that, these stocks have underperformed. They've performed well on an absolute basis, but it's really been 2.5 months now that the market has broadened its rally. That's a huge positive. And this is what you're saying, Kari, with do your work and find stocks outside of the Magnificent Seven. Find stocks outside of information technology and communication services. It isn't that hard to do. I mean, I'm actually, Scott, I'm really happy that we're not having an economic discussion right now, and I'm not going to mess it up by having one. I'm just going to simply say the data continues to come in that supports a growing economy with slowing inflation. That is an environment in which you can look further afield. You can look in the cyclicals, materials, energy, industrials, and financials.
I would argue, I mean, when you say it's not that hard to do, I would say, yeah, actually it is that hard to do. Well, which ones are you going to pick? Which ones are you going to pick?
Well, let's pick a sector. Let's pick financials, shall we? I mean, that's one that certainly last year didn't have a lot of love.
Materials.
Yeah, I mean, I don't think we have time to go through all of them. Let's go through financials. I mean, I think there's many easy things that we can say here, whether it's big money center banks that are trading at discounts to their historical multiples of book, or you can look at something, and I don't know if we want to talk about this later, but BlackRock, that's something that this is an easy thesis to understand. If the market's going up, both stocks and bonds, which most of us predict for this year, well, their assets under management are going up and their fees are going up. So what I'm saying here is a synthesis of 2 things. Kari just said, do your work, look further afield. I completely agree. But I also say in some cases, it isn't that hard. Look at JP Morgan, the creme de la creme. Didn't it set an all-time high just a couple of days ago? It isn't that hard.
Well, I mean, if you want to look at more economically sensitive names, you could make the argument that it is a little harder. To your point, right? You said it. So. You said it's going to be harder.
I said it
this year.
I believe
right?
it. Yeah.
Don't just look under the hood. You got to take the engine out and look under there. Look under the car, because it's just not that simple when you're worried about what the trajectory of the economy is going to be, when the first cuts are going to happen.
Sure. We don't know any of that.
Exactly.
That's all in the future, but when? So trying to pick a date. Oh, I want to be in the interest rate sensitive stocks by March 15th because we're going to have a cut down. That's ridiculous.
You want to tell me what kind of year Freeport's going to have today?
No.
You want to tell me what kind of year that Caterpillar or Deere are going to have today?
Deere had a terrible year, so let's hope for the owners that it has a better year, and Cat's at an all-time high, right?
You want to tell me what kind of year autos are going to have this year?
I now understand your question.
Yeah.
I now understand your question. So let me rephrase this. Relative, and this is what Kari was saying, relative to the Magnificent Seven and the Triple Qs last year, which was the easy button, just push the easy button. Yes, Scott, you're absolutely right. This requires all of us doing the homework that we love to do. Opening up the hood, taking apart the engines, what we love to do, frankly. But when you do that, and I do that all the time, I do come out and I say, to answer your question directly, deer? Yeah. Cat? This seems pretty easy, particularly as the cost of capital is coming down. Stocks like this that generally have more leveraged balance sheets should find that a less of a headwind at the same time, and this is very important, that the economy continues to grow. So there's demand for excavators. There's demand for financing. There's demand for copper. You mentioned Freeport. There's demand for copper. That's the thesis. I feel actually a lot better about that thesis than I have at any point over the last 12 months.